All right, traders, it is time to prepare to trade the best setups at the best prices. We're going to be going over our new key make or break levels where we're planning to buy calls to go long and buy puts for the short side. This is going to help make you some money heading into this week, so we're going to get straight into it. Towards the end of this video, I'm going to be recapping some of the trades and mistakes that were made. I did start off fairly well. At one point, I had 5 wins in a row, but I kept on trading and I kept on over trading, and then I was trading lower quality setups, and then I was trading emotional, and I did end up going red starting off to green, back to red, down $7,000 on the day. So I'm going to be going over the mistakes I made towards the end of this video, but let's get straight into it. So in terms of the SPY, my main thesis is just to continue to focus on buying oversold dips. And we're going to want to be analyzing key support levels to be buying the dips. And we're going to want to be analyzing key 30-minute bottom wick support levels to buy the dips, right? So one of the issues I have in terms of with buying calls was it's not at my lower key levels. However, in terms of this week, what I believe is going to happen overall, in terms of this week overall, not right away, in terms of overall this week, I think we're going to see a retest of 443 to 444 zone. I think we're going to go back up overall. Like, we could have a little drop first, but it will recover if that happens, likely, in my opinion. But overall, within this week, I think we're going to go up and then we're going to drop again. So there's a gap to fill at 443.13, and then there's resistance at 444, right? So obviously, with the price being at 440, I'm not going to want to focus on puts. I'm going to want to look for call opportunities, but I don't want to buy my calls high because it could still have a little drop before recovering. So what's the plan with that, right? If I'm overall bullish for the short term and I'm not expecting the drop and crash, and I'm not interested in puts really until 443 to 444, what are the key levels for me to focus on calls? So these are going to be the updates. My key levels for calls, and in terms of how I'm doing this, I'm going to be using the 30-minute chart. So this is going to be our new key levels for call options. We're going to be going with the bottom low point of 30-minute wicks. So as you can see right here, we have a lot of support at this. This is a key one that hasn't been tested. This hasn't really been tested, which is going to be 437.60. That's going to be my first key level for calls. 437.60, 437.70. If we drop back towards there, the most likely outcome is later throughout the day, we could, pull back first, but the most likely outcome overall is we push back up to bring those 438 out of the money calls to back in the money. So that's what I'm liking. I'm going to be keeping an eye on 437, 438 calls at 437.60. I'm also going to be keeping an eye on 438.50, but not my best level. So basically the levels that I like are 437.70 and I like 436.50. Those are my newly updated levels, 436.50 and 437.50, right? So those are going to be the new updated levels for calls. If those were to crack and I get stopped out, then I'm going to be hitting 435.80 with size and 434.70 with size. But basically, in terms of studying the overall trend, what I'm seeing is we could have a small pullback first, but overall direction, I'm seeing 443 to 444 retest, and then I'm seeing a nice crash. So in terms of puts, like I said, I'm seeing signals on the chart where we could drop a little bit lower first, then recover, but overall, bullish dips are going to be the play instead of trying to chase puts in the middle when overall it's going to go higher first, in my opinion. Even if it drops, even if it were to crack 437.50 first, I still think as of now that we would push to 443 this week. So I'm just going to be focusing on oversold dips. I don't want to be touching puts in the middle of the channel. The only prices I'm looking to buy puts are going to be at the resistance. So your best resistance is going to be the top of the channel. This is where the puts have been banking. This is where we've been consistently making money from puts, from this 444 to 443 range, right? So that is my zone to do puts. 444 is the best resistance level possible as of now. And then we have a gap to fill above at 443.17. So it's very, very simple. It's basically just stay the fuck away from puts until we hit the best levels. And in the meantime, in terms of, what levels are we going to be buying calls? This is what you're going to want to do. You're going to want to wait for a bear trap to get created and then buy the retest. So what do I mean by that? Well, this is exactly what I mean by that. Like I told you guys, it's a little bit difficult in yesterday's video because we're not the best prices for calls. But I told you one thing you could do is wait for the bears to get trapped. So right here, what is a bear trap? The bears got trapped at 438. It opened up at 438. It spiked all the way to 440 almost, right? So if it's going to instantly drop right back down, that's where you buy calls on the low of day retest or at the pre-market lows, right? So you're just looking for a big overall move up, a big overall spike up, and then you're buying the retest of the lows. That's what it is that you're doing, right? Even though it cracked here, it quickly recovered. So that's what you're looking to do. Also, you want to be focusing on bottom 30-minute wicks. Whenever you see a 30-minute candle towards some decent support, towards some oversold zone on the day, right? When it's forming these wicks, you see the bottom wicks, you're going to want to buy towards the low of that 30-minute wick. And if it cracks, you could try like adding one more, two more contracts, right? So those would be my tips and tricks for calls. Like I said, the only issue is, it's not at the best levels to be buying calls. But the way I see this is, even if this were to like drop first, it's going to recover anyways. And overall, it should be bullish to 443, 444. Like even if we were to drop to 437 or 436.50, in my opinion, it should recover anyways and still go to 443. So basically how I see this is, I'm just going to continue to focus on buying the dips. And the way to buy the dips is to look at the low bottom wick of the 30-minute candles that have not been tested. So like right here, this hasn't been tested. 437.60. Also, just wait for the bears to get trapped. So wherever you see, you're looking at the market this week, wherever you see a bear trap was created, a massive spike formed, don't go chasing a rip, wait for it to drop back down and then buy into the bear trap level. And then just go with our other key levels. We're looking at 436.90, we're looking at 437.60, we're looking at 436.50. All these are great key levels for calls. All of these levels right here, all of these bottom 30-minute wicks right here, right here, right here. These are all phenomenal levels for calls, in my opinion. So that's what we're doing. And in terms of reversals, what I've been noticing is they try to make it look bearish and they try to bring it lower. And, everyone gets panic stopped out. Everyone sells and cuts their calls for loss. Some people might even switch to puts, which is the worst thing you could do, is to buy puts into a dip. Write that down for this week. The worst thing I could do is buy puts into a dip, into a support crack. Write that down, because what I'm noticing is they try to make it look bearish. Like right here, this is a good example. There was a lot of support right here on the SPY at $438. It has a nice move up to 440 almost, then it drops to support, it bounces, forms a lower high, red 30-minute, and then it goes red, right? It cracks the lows, and then it just flips back to super bullish. So basically, if you didn't hold through this low of day crack and you got stopped out, you missed out on a very nice run up, unless you got back in. But the point is, they try to make it look bearish when it's at one of the best levels possible, hitting new lows, and then they flip it bullish. And basically, if they do that again, and I'm seeing signals where that could happen again, I think the same thing's going to happen. They're just going to flip it bullish again. So just focus on oversold dips. Focus on buying the calls when it's at the level. So like right here, it's at one of the best prices to buy because this is where the bears got trapped on the day. And then you see that cracking new lows. That might be a good indication to start buying some calls when it looks bearish because they're likely going to flip it bullish, in my opinion. So that's what I'm seeing in hindsight, and that's what I'm going to continue to focus on. Because in terms of my losses today, they all came from put options, and there was no clear or real reason why I was really doing put options. It was emotional. I was just trying to have a nice green day. I ended up starting the day with puts at the worst price possible, literally just taking a YOLO in a sense, just buying puts directly at open, start off the day with a $6,000 loss. Then I had 5 wins, and the vast majority of those wins all came from calls in a row, 5 wins, and then I was up $2,000 on the day, and then I flipped back to red because I kept on over trading, and I kept on trading lower quality setups. And the reason why I believe I was doing that, I was trying to have a big green day. I was very excited that I went from red to green, considering that I started off with a nice, fat red loss. And that's what's going to happen if you're going to trade market open with size. You're going to have much bigger losses because the moves are just so volatile and dangerous. You can get instantly trapped like I did with puts. And there was literally no valid reason for me to do puts. I just jumped the gun, right? I wish the market was open seven days a week. That way we can train 7 days a week, so we don't have any emotions or anything like that. If you stop trading, you're going to come in more emotional, in my opinion, and not as well experienced and trained because you stop trading for 2 days over the weekend, right? That's going to have some sort of impact or effect on you. Unless you're like super disciplined, but still, if you're trying to build up a skill, the best way to do it is every single day. And that doesn't mean you trade every single day. That just means that you're building consistency every single day. You're being disciplined every single day. You're doing what you're supposed to do every single day. So if the market doesn't give you the opportunity to trade that setup you're looking for, then you're not trading that day, but you're sitting there and you're watching it to see if that setup appears. So in terms of the main mistakes that I made, First of all, just taking a stupid trade on puts it open, that already put me down the hole. After that, the trades were phenomenal. I did have 5 wins in a row. But then after that, when I went from red to green, I went back to red and I just kept on going at it. It was just being emotional and just not making good trades, man. I over traded so much today, and I haven't done that in probably about I would say about 2 months. But yeah, man, I really over traded. I made at least like probably 12 trades today. So this is definitely over trading for me. Some ways you can prevent that is to know your average on how many trades you typically take a day. And then if you're starting to go above that average, that's going to be an indication that you're likely over trading, right? So for me, I would say a good amount of trades per day with some quality setups are going to be like 2 to 3 setups. 2 to 3 trades a day would typically be the threshold. So if you're going over that, that could be some indication that you're over trading. And then also just hitting puts, man. I'm telling you, we're not in a current market to be doing well on puts unless you're going with the best levels. Believe me, when we get to 443 and 444, I'm all in on puts, man. I'm going to be hitting puts. I'm going to be staying far away from calls. And I'll even look to hold my puts a little bit longer for a bigger loss because I love the levels and I think it's going to work out fantastic in that zone, right? I just think overall, man, the worst thing you could be doing is buying puts at the lower levels, especially if it's at a key support level, right? Just avoid puts, man. You got to wait for the best levels. I've been avoiding puts for weeks now. Today was a day where I finally was a little bit more heavier on puts, and it just wasn't working out. It wasn't working out well for me. Another reason why I think that is, we had a lot of people within the chat, some of the best traders within the chat, who were doing extremely well on puts, and they were finding a lot of success on puts. But I wasn't doing the puts when they were doing them. I was doing it later on, and they weren't doing them, and I just wasn't doing well on puts. So I'm just gonna be avoiding puts, and the reason why is we're not at the best levels for puts, and I'm overall bullish for 443 to 444. Then we crash and sell off. So instead of just trying to make a quick scalp against the overall trend, I'm just going to be looking for dip buying opportunities to buy when it looks bearish to recover for a reversal. You know, if I think it's going to go to 443, 444 this week, why not buy calls when it cracks the new lows? Or why not buy calls after it cracks the new lows and then forms a bullish 30-minute wick, right? Stuff like that. So that's what I'm going to be looking for personally, is bullish confirmations at very key support levels, at new lows, when it's looking bearish, when the bears are celebrating, when the bears are selling, locking gains, like stuff like that, man. Because we all know in terms of the current market we're in, like, you cannot be buying puts at support. You're going to get absolutely wrecked if you're buying puts at support. And the risk to reward is going to be absolutely terrible. You're going to have to get in and out quickly. It's not a smart thing to be doing, right? So in those situations, I'm just going to be focusing on calls. And then until then, I'm just on the sidelines. That's where I see it, man. So I'm going into this week with overall thesis. I'm not going to blindly trade that bias, though. I am going to let it influence me and sway me into trades. But based off what I'm seeing, if I'm seeing the opportunity, I'm seeing the trade opportunity, I will be looking to take calls into fearful dips. The best way how I see this as of now is when it looks bearish and it looks like it's just going to, hit an unreal support level and it's looking super bearish. That's just when I'm looking to buy calls in a sense. Like basically like right here when it's just cracking new lows, it's looking bearish. You can wait for a bullish flip as well. You're just not going to get the best entry. But I'm sold on the idea that later this week we're going to see 443. So those are my overall thoughts. And like I said, for calls, man, if we go to 437, I'm hitting calls. If we go to 436.50, I'm hitting calls. If we go to 435.80, I'm hitting calls. If we go to 434.70, I'm hitting calls. I'm hitting calls on all of those key levels likely. So yeah. And like I said, I'm not worried. Like if this drops tomorrow, that's completely fine. It's going to recover in my opinion. If we go to 437 or lower, I honestly think we're going to recover. So it's completely fine, man. But I'm going to trade what I see and I'm going to focus on that. But guys, just make sure that you have a better understanding to prevent over trading. Just make sure that you understand the clear setups that you're looking at. So like me making this video, I understand exactly what it is that I'm looking to do heading into this week. And it's going to be call focused, meaning I know even if it looks bearish to just avoid puts unless we're at 443 to 444 and it looks bearish, then I can do my puts, right? Or even maybe if it looks bullish. But yeah, it's just understanding that and sticking to the plan, but don't blindly trade a plan. Trade what you're actually seeing, but kind of stick with the plan. Don't go against it, right? Like for example, if it looks super bearish and I'm losing money on calls and I cut my loss on calls and it looks super bearish, but I know it's not at a good level for puts, my plan said to avoid puts. And if I just would have stuck with that, then I would have done great. Because like overall, man, my thesis was overall correct today. If we go to, the watch list and everything, like I said, man, I had 5 wins in a row. I was doing very, very well after that first loss in the morning. It was a very quick loss, but it was a bigger loss because it had such a big spike quickly. But overall, man, like SPY, this was at 10 a.m. SPY will have a super bullish day in my opinion. I will continue to focus on scalping dips. I was doing very well on calls after that. And then towards the end of the day, I just kept switching to fucking puts and just giving back $500, $1,000, $1,500, $2,000, just keep giving back profits with losing streaks. But it was just very poor scalps. They weren't like big losses or anything like that. It was I kept buying puts at 439. And it kept going to 439.15. And I did it like 4 fucking times in a row. And that adds up to like $4,000 or $5,000 in losses with those 4 losses in a row. So they were just very baby scalps, trying puts at a key level. So, well, it wasn't even a key level. So I'm just going to avoid that. If I'm doing puts at the best fucking level within this bullish market, which like I said is 443 to 444. If you make money on puts, before that, all the power to you. But I know what I believe is going to work best for me. And that's going to be buying call options on oversold moves. Like if we go to 437, I'm buying calls. Love this wick. 437 right here, I'm buying calls. I like calls at 430, 470. I like calls at 435.80. All levels I'm interested in buying calls for, right? But in terms of the overall day, man, it was fairly good analysis, but it just got very sloppy and very frustrating towards, I would say, past like 1 p.m. It was just getting unreal, man, where the price action was just absolutely terrible. This right here, this sucked. I absolutely hated this, man. These are very baby scalps, and when it moves like this with very small baby moves, you have to be getting the best entries possible. And I just kept hitting the puts at the wrong entry. I kept hitting the puts at 439. And it just kept on ripping to 439.30 every single time I got in puts. The timing was off. The entry was in the middle of the channel. That's the thing. If you're going to trade these small baby channels, you can do well, especially with 0 dates. But you need to be getting in the calls towards the lows and the puts towards the top. If you get in calls or puts towards the middle, what's going to happen is your timing could be off, and then you're just going to get stopped out, and you're going to get emotional. And that's what happened to me 4 fucking times in a row. But like I said, man, there was just no valid reason to literally do puts in the first place. And I was overall bullish on the day. The bears in the chat swayed me into be more bearish. And then I was seeing some potential reasons to be bearish. And then I was just not really trading what I see. I was just kind of more biased into buying puts. But I've learned, man, it's a fuck puts market. I'm not interested in it. If we go to 443, 444, I'm smashing puts. And like I said, I'm seeing signals where we could drop and go to 437, 436.50. But if that happens, it's going to be the greatest fucking bear trap, in my opinion, to be buying calls. So no worries, man. All the power to it. I love it. I'm looking forward to crushing it this week. And like I said, just some tips and tricks in terms of, have a clear sense of direction. Wait for the best setups to the best prices. Wait for the channels to develop. So if you wanted to buy calls, the bears got trapped right here. Buy calls on the retest. There you go. Just keep on doing that all fucking week, along with my 437 level, 436.50 level, 437.60 level, those key levels as well. Bottom low of 30-minute wicks. If you're seeing the bears get trapped at the key level and then it retests the key level quickly, look to buy calls there, man. You should do fairly well this week if you're using this information. And then I'm telling you, man, for puts, bearish 443, 444. I'm buying puts heavy. I'm aiming for the bigger win. Absolutely love that idea. So I can be a bear, and I'm going to be a bear at those fucking levels, but you got to wait for the best setups of its prices. I've learned, man. I've learned. I've tasted the side of puts today, and it was not good. It was not fucking good. I hit puts at open. Then all I was doing calls on the dips, 5 wins in a row. Then I switched back to puts at 439, 4 losses in a row. So I know what it tastes like, and I'm staying the fuck away from it. And that's what it takes to win sometimes. Sometimes in order to win, you have to lose first. There's been situations just to get a feel and a taste of the price action. I'll do a very small position size, and then I'll have a small loss. And then when I take that small loss, I'll know exactly what it feels like to be in the trade, what it feels like to be in the current price action, exactly what's going to happen next. And then I'll size in big. There's sometimes where I do that. And I only do that when I'm not 100% sure. So if I enter a trade, I'm not 100% sure, I'll just take an extremely small position size with the expectation of losing. And then the knowledge I gain from that loss on the day is going to make me money on my next trade. Like I did that today with calls. I entered this trade. It was a $300 loss on calls. And then I knew where the exact bottom was going to be after I got stopped out. And then I hit it with some size and I made $2,000 after that. So that's another thing you can do. You can just try one contract if you're not 100% sure. And that being in that trade could actually give you the information, experience, and confidence for your next trade if it turns into a loss. Because in order to win, you have to learn how to lose first, right? So if you're starting off with a small loss, that being in that experience is going to help you for your next potential trade, right? So if you're not 100% sure, just don't enter the trade or just do one contract and think of it as like, I'm going to cut my loss quickly. It's just for learning experience for my next potential trade on the day. And then you hit that one with some size. That's something that I never hear people talk about. And typically when I do that, I do very, very well. And I cut my loss extremely quickly, even on that one small contract or whatever it is that I'm doing, that small size. It's just for learning experience for that next potential trade and just to be in the market, because you're going to feel different and when you're actually in the trade in the market versus when you're just watching it. So if you get a taste of it, it's going to give you more confidence, for your next potential trade. But guys, just have clear setups, be patient, wait to trade the best setups at the best prices. And eliminate the FOMO, man. Just try to be disciplined. Try to become more disciplined each day. Get to the level of discipline where you're trading less because okay, this is another key. If you know, you just hit a very high quality on the trade on the day, right? So, your experience as a trader, right? You're doing this frequently. Your experience as a trader. You should know if you just hit a very high quality trade on the day. And if that's the case, where you're like, wow, I just hit a very nice trade on the day. That should be the moment where you take a step back and then you just do nothing. And then if you decide to make another trade, it should be like a smaller position size. You should know how much profit you're going to risk. You should not be going green to red if it was a nice trade. And you should have the understanding that, that was such a great trade. I just don't see how I'm going to top that. I just don't see how I'm going to be able to top that trade today. Therefore, if I do make a trade today, it should be on a very high quality setup. It should be on something where I can actually see myself topping that trade that I just made, because it's such an amazing opportunity, right? And you need to visualize what that trade would be. You need to have that understanding. Okay, I just had a very high quality trade. Now, what would need to happen, right? I don't think it's going to happen. I don't know it's going to happen. But what would need to happen for me to make another trade? Oh, it would have to go. Okay, so like for example, let's say right here at 2 p.m., SPY's at 439.40. And I'm bullish on this SPY. I think it's going to retest the high of these wicks like it's been doing for over a month now, right? 439.80. It loves retesting the high of these wicks, right? If I made a nice trade on the day and I'm done, I'm chilling, what would be a trade that were to happen? I don't know if it's going to happen or not, but what would be a trade that could happen, right? Because you never know. Anything can happen. That brings me out of retirement and puts me in a situation where I make another trade on the day because it's such a high quality setup. Well, I know SPY's been banking off the low of these 30-minute wicks, and this one hasn't been tested, and that's at 437.60. So if SPY's at like 438.60 or 439, it's towards a higher level. And then within the next hour and a half, it just has a very nice drop all the way back to the lows of this wick. I know visually that would be the best trade I could possibly make, is to buy calls at 437.60. And, you can watch the charts and get a better understanding of if that's going to happen or not. But it's not even about that in a sense, because if you're watching this and you're trying to convince yourself that it's going to happen or not, say you don't think it's going to happen, then you might enter a trade at a terrible price and you might take a loss. So it's just kind of like letting it go. Like if this is at 439.40 and you're green on the day, well, what's a trade that I know would 100% work and would be an amazing setup? Well, if this went back to the low fucking day and at the bottom of the 30-minute wick, it would bounce, just like it did right here when it bounced on the low of day retest and it forms the bullish wick, just like it did right here when it even cracked below this bullish wick and it was still a great dip buying opportunity even though it cracked, right? So it's just having that understanding of just visually looking at the chart. Okay, I see a great opportunity for calls. I see a great opportunity for puts. I don't know if it's going to hit or not, but I do know that would be that high quality setup that brings me out of retirement because the price is right and SPY's been ripping off the low of these 30-minute candles. So I'm going to set my price alert here and then I'm just going to walk away. I'm not going to try to convince myself that it's going to hit or not. I'm not going to try to force another trade at a higher level because I think it's going to hit. So it's just having that mindset. Like, what would be another one? Well, I know, in terms speaking on the day, like if it were to retest 439.80, it would likely have a small drop. If 440 puts went out of the money, it would likely have a small drop. I know that's not the best level for puts or what I'm interested in doing, but that could be a good opportunity for a quick scalp on puts. I know if it just ran up to 443, that'd be a great opportunity for puts. So it's like, you don't even really need to know if it's going to hit or not. You just need to visualize what you would do. And if it has that overreaction, and you're going to see Sometimes it's going to have that overreaction and sometimes it's not. But it doesn't matter because you're already green on the day. You know what I'm saying? You're already green on the day. If a crazy overreaction is going to trigger to put you in another trade, then it was meant to be. Is the best setup at the best fucking price. So that's another tip and trick I can give you. Just wait for something. Think about it as like an unusual high quality trade. You know, what would be an unusual high quality overreaction where I would get in puts or calls, and then set your price alerts there. And then if it triggers on that day, you can look to get in. And then if not, you retired green for the day. You're still green. You didn't miss out on anything. All you missed out on was not the best setup at the best fucking price. So there you go, man. That's some tips and tricks I can give you. And just stay disciplined, man. Stay disciplined with your approach, with your thesis. Also be adaptable. And wait for the 30-minute patterns, man, because in terms of today, I was over trading a lot, and that just came from me wanting to trade. I literally just wanted to trade. I mean, this was such a great day to just buy dips all fucking day. And I told everyone in the chat, and then for whatever reason, I just swayed away from, buying calls towards like 1 p.m., 2 p.m., and I just kept on taking loss after loss after loss doing that. And that was well deserved because I had an overall bullish thesis, but I got off track for whatever reason. I believe it was some of the people within the chat who influenced me more to be bearish. But you have to be extremely strong-minded, and you can't let others influence you. That's why it's good to really not even look at what other people are saying unless they could read charts accurately and stuff like that. But I just prefer to trade the chart and not what other people are saying. But other people influencing in affecting your thesis is not good. You have to be very strong-minded to see through that. And that's another skill set to have. But yeah, man, I just went wrong with the put side. But that's what I wanted to explain to you guys. If you do want to be a part of Trader Society, it's going to be the first link down below in the description. It is a one-time fee. It is lifetime access. I will see you guys tomorrow. Live at Market Open. You get access to the chat room, the Discord server, the networking opportunities, all of our real trade alerts. You also get access to the video lesson library along with, all my real-time trade alerts, the moderators, the networking opportunities, the local connections within the chat. We have plenty of great moderators who can help assist you as well. We will see you guys tomorrow. Live at Market Open. Let's crush it.